2017, I thought we were late to crypto. The players that were going to win had already won. Turned out to absolutely not be the case. It was still like the early innings there. And that's what's happening with agentic banking.
Today's guests are Nathan McCauley, the CEO and co-founder of Anchorage Digital, and Kevin Wysocki, Anchorage's head of policy. Anchorage was the first federally chartered crypto bank in the United States. They were on the forefront of the stablecoin adoption side of things, institutional adoption, many different things. So I'm excited to chat with them today. Nathan and Kevin, welcome on.
Thanks for having us.
Yeah, thank you.
Yeah. Over the past several years, I would say Anchorage has been at the center of the institutional crypto adoption front, working with teams ranging from asset managers to protocols and stablecoin issuers. So you've kind of had this front row seat to institutional adoption for years. Even though that trend is kind of like picking up speed over the past 12 to 18 months, you guys have been in the thick of it. So maybe at a high level, starting with Nathan here, like what is your take on the state of the institution's adoption curve today?
So I think you're exactly right to say that it is something that's been in the works for now, probably the last 3 to 4 years, really in earnest. But what we're seeing right now is an absolute acceleration. And so if you look to the previous administration, you saw some real milestones like the first ETFs start to get approved, the first banks start to make a foray into the space. And now with the passage of Genius and fingers crossed the eventual passing of Clarity, what we're seeing is everybody starting to come in. Far more asset managers are starting to come in the space and either look at launching new crypto ETFs or tokenizing their existing funds and assets. And then institutional allocators like large banks, large financial institutions starting to build in the space, whether they're building in stablecoins, tokenized deposits, or real world assets. So absolutely a sign of acceleration that's been happening, and we're getting to see a lot of that from the front row seat.
Kevin, how would you categorize the state of the industry's adoption curve today too?
It's really strong. I would say, like Nathan, the Genius Act was a huge unlock. I think when Genius was passed, the market capitalization of stablecoins was around 250 billion. Now it's north of 300 billion and growing rapidly. And I think when we get clarity across the finish line, it's going to lead to more capital in this space and more growth and more projects.
100%. I know you guys have been talking about digital dollars for years, stablecoins, however we want to categorize it. What are institutions understanding today that they weren't even asking about, let's say, like 1 to 2 years ago in comparison?
Yeah, I mean, I think the biggest thing is the level of things that are now possible to build on top of stablecoins, and you see it in both old school type use cases, like say pay-ins, payouts of your suppliers, of the people in your ecosystem. Absolutely seeing it there. Textbook example of this is everything that Western Union is doing with us. Western Union has decided that they're going to upgrade their remittance flows, and central to that is the issuance of a new digital dollar that's going to exist within their ecosystem. This is going to enable a whole set of interesting use cases for them, probably principal of which is the fact that folks in the developing world receiving remittances will be able to receive those remittances and stay in the Western Union stablecoin, rather than having to immediately convert into local currency. They can stay and become U.S. dollar savers. So that's a very old use case that is now being upgraded with stablecoins. As strong stablecoin use cases we see are agentic banking. Where agent-to-agent commerce is starting to pick up. Still small, but there are some very compelling initial use cases that are starting to happen there. And so it's also at the center, I'd say, of the AI revolution. And then everything in between. Every single bank in the country is looking at, do I integrate with a stablecoin? Do I issue tokenized deposits? What is my strategy going to be for upgrading my infrastructure to the new age of digital dollars? So really seeing it across the board. And then, probably what Kevin would love to talk to is some of the government use cases we're starting to see around dollar dominance and other use cases like that. So, Kevin, feel free to jump in.
Yeah, I think when the bipartisan members of Congress passed the Genius Act, they were really focused on like what this legislation would mean for the future of the U.S. dollar. Obviously, the dollar is the primary world reserve currency today, but they were looking decades ahead, right? And obviously, there are a number of competitors worldwide. A lot of people talk about China, Russia, and some others. The digital dollar through the Genius Act, right, now can proliferate around the world more easily. Like we said, we've already seen growth because of the law, and there are a lot of estimates out there saying like the market can easily get to over $1 trillion by the end of this decade. There are estimates that are stronger than that, and what that means too is it's not just about like the dollar and it being used around the world. There are secondary effects, right? So national security, BSA, AML, sanctions provisions, that can be enhanced. There are people around the world that don't have a stable fiat currency domestically. They can use the dollar more easily. There are people that really want to use dollars, businesses and such, and it's harder to access them at times. Stablecoins make it easier for people to use the U.S. dollar, so it's really a win for everyone.
So how do you think about it from a global perspective then, to the point of the dollar dominance? Is the US winning the race here for stablecoins then? And if so, what are the other regions to maybe keep an eye out for?
So I do think that the U.S. is winning the race for stablecoins, but in many ways, I would say that not exactly sure that stablecoins are the right way to think about the playing field. Like, is the playing field
Right.
stablecoins, or is the playing field actually just currency? And what's happening with stablecoins and tokenized deposits is that you're finding another form factor for an existing currency. And so I think that's probably the way that I would look at it, is that the global expansionary desires of many nations are to have their currency accepted worldwide. There's a number of dominant currencies worldwide, and they've been in various stages of their evolution for the past really century. And so stablecoins is kind of the next, maybe to use the analogy, battlefield, if you will, for which currencies will end up getting used. But the dollar itself is already such a wonderful product, already had incredible global demand. We saw that with the popularity of products like Tether even before the Genius Act passed, where they were already filling in that need, that global demand for dollars. Tether, of course, has been an incredible company and has been really kind of central to the growth of the digital asset industry. And now we see that really that mantle that they originally picked up is now being expressed through the Genius Act as a matter of foreign policy for the U.S. So yes, I would say undeniably the battle for currency, the U.S. dollar is winning there, and there is a nearly insatiable global demand for that product, and that's to the benefit of all Americans.
Would you guys differentiate digital dollars and stablecoins, or are they interchangeable? I just want to make sure the audience understands too when we say this.
Sure. Yeah, I think there are like many different forms of like a dollar, or something very similar to a dollar. When I think of the Genius Act, I think of payment stablecoins, right? So those are for domestic use in the United States. They're backed one to one, typically by short-term U.S. Treasuries, repos, things like that. But interestingly, like the things that I'm just mentioning that kind of back these reserves often are thought of like money-like, right? So there are other forms of money. So you could talk about tokenized deposits, or a deposit at a bank. Domestically, we all have a pretty good understanding of what that is in terms of a checking or savings account. Internationally, there are banks that supply loans in the dollar. Those are often called euro dollars. That's kind of another form of a dollar, right? So there are many like manifestations. Another significant one is like a central bank digital currency that some people talk about, some countries are
Yeah.
thinking about. So there are many different forms that a dollar can take. But stable coins, what's beautiful about them, and specifically payment stable coins, is those are the ones that got bipartisan acceptance from Congress, from the White House, and that's what like we're leading on. We've now issued 5 different stable coins. That's what a lot of institutions in the United States and around the world are actually looking to use at this point, because when America sets the standards, a lot of other countries fall in line, and that's what we've seen when we've talked to other central banks around the world. They're trying to replicate the Genius Act now.
Yeah. No, I mean, when digital dollars kind of came into the picture, I feel like they've been increasingly used around the world to the points that you guys are making, and especially following Genius. So what does that ultimately mean for cross-border commerce and the future of global payments then? Does the dollar continue to grow dominance as a result?
I think so, but I think the way I would frame it is something similar to what we've seen in other areas of tech, where just by way of analogy, when Uber and Lyft first came out, it would have been a category error to say that the size of their market is the taxi market. It turned out that fast, easy, accessible access to service like ride hailing
Yeah.
was actually expansionary in terms of the number of use cases that were now possible. And so I think this is what we're going to see with stablecoins. We're going to see far more remittance corridors be viable. We're going to see agentic payments start to build up. We're going to see settlements against tokenized assets, where now assets, other kinds of stocks, bonds, equities can come on chain because of the fact there's a digital dollar to settle with them. That'll drive settlement times down to possibly T plus zero. And all of these are going to be like fundamentally expansionary. And the good news when there's an expansionary market like that is that the sum total size of the market is actually larger than you can even imagine right now. And so, there might be worth, in some sense, talking about competitive pressures there. But typically, when you see a market like that is expanding so rapidly and following such growth curves, there's room for many different players and many different ecosystems to flourish.
Yeah, I think also, I know, Nathan, you came on the podcast back in December, I believe it was. So, like, fast forward 7 months later, I think a lot of the momentum around this has changed a lot. And, Kevin, we've talked to you too in the past about Genius. And after we passed this, like, 1 year anniversary for it, I think a lot of the conversations have evolved and accelerated over the past 12 months. Today we got banks, payment companies, governments, et cetera, all talking about stablecoins. So how do you kind of think about where to go from here to keep that momentum up, in year 2, 3, 4, and beyond? Because it's obvious to kind of keep it while the iron's hot, but like, where do we go from here?
Yeah, one of the analogies I like to use is that there's this entrepreneur from the Midwest. So I'm from the Midwest, and so I like a lot of the entrepreneurs from the Midwest. There's a really interesting gentleman by the name of Ransom Olds who founded Oldsmobile. And one of the things he did was actually launch an entire marketing campaign across the country to try to convince everybody to build roads. Why did he do that? Well, because he had this car, and it was a wonderful
He wants
car.
to get on the road.
Yeah, but it needed to go places. It needed to be able to get to different cities, and so I feel like that's going to be the wood to chop once we have digital dollars put on chain, whether it's through stablecoins or through tokenized deposits or through other mechanisms. We still need those rails, and the rails look like the fintechs all getting integrated, the banks all getting integrated, self-custodial wallets all getting integrated, building settlement systems and dispute resolution systems, all of the like meat and potatoes that are necessary to run a fully functional financial system. And that's going to be, honestly, decades of work, decades of innovation. And so in a real sense is always going to kind of be day one in stablecoin land, because of the fact that you're going to be building on so much of the infrastructure that needs to get put into place. But what happens after you get that in place is that you get to do really interesting things. So first step is issuance, second step is infrastructure, and then after issuance and infrastructure are solved, that's where real innovation, I think, comes in.
If you're building with stablecoins, the question isn't can you just issue one, it's who do you trust to get it right. Regulated stablecoin issuance starts with Anchorage Digital. Home to America's first federally chartered digital asset bank, Anchorage Digital brings a level of regulatory standing most players in the space simply don't have. This means end-to-end stablecoin issuance built on a compliant foundation. Pair that with correspondent banking that connects stablecoins to the traditional financial system, and tokenization infrastructure that lets institutions bring real-world assets on-chain securely and within the rules. To find out more, visit Anchorage.com. What does that theoretical campaign look like then? If we got the road analogy that you brought up, what would be the one for stablecoins?
So I think the banner ad for stablecoins or tokenized deposit is clarity has passed. Now you must integrate crypto, and getting that integrated into every single bank in the country. There's about 5,000 of them that are all going to need stablecoin rails. And so in the same way, ransom wallets went to every city and said, "Hey, you should build roads, streets, paved infrastructure inside your city." That's what's going to start to look for all of the banks. And what we're going to be telling them is you're going to be able to have programmable instant settlement. You're going to be able to do global remittances without any risk. And you're going to be able to have more control over your infrastructure. It's going to be instant, it's going to be final, and it's going to reduce the risk in your systems.
I think I've seen like accelerating growth in stablecoin adoption, right? I think you're going to see even more once the rules for the Genius Act are finalized. I think a lot of times these institutions are pretty conservative, and even now they're asking like, oh, well, this particular provision in the OCC proposed rulemaking, what does that mean exactly, right? Are you sure this is good? I think once those are finalized, like we were lucky, we've already had 5 right out of the gate before Genius is even in effect. But I think more and more of these banks, regional banks, community banks, are going to get comfortable with it when they see the rules themselves, and then they're going to start investing more.
Yeah. Where are you guys seeing more demand right now internally on Anchorage's front, whether it's on the crypto bank side of the business versus stable coins? Is there a certain like percentage of time that you're finding to be growing more and more towards one or the other, or is it kind of split evenly?
Sure, I think it's an interesting one to just think about, like where even where I'm spending my time. And so we've got the crypto bank where we're holding assets for institutional investors, and that's been going through very significant growth. It's actually been doubling every year for the past 3 years. So there's a lot there, but I will say it is a mature business with an incredible management team running it that has it really set up for success. Some of the new and more innovative areas are where I spend some more of my time, frankly, on it. How do we make sure we get the infrastructure built for the next stack? How do we make sure that our go-to-market motion matches with the net new go-to-market motion that we're going after? For example, now we're talking to a lot of tech companies. We're talking to a lot of Fortune 500 companies because they are going to be adopting stablecoins. They weren't necessarily interested in the Bitcoin story, but the dollar story and the improvement on the dollar story is absolutely interesting to them. And so that means new tech, new products, and new go-to-market to go after each of those. So have been spending a lot of time there, and not at all like the exclusion of the existing business, but just since it's an expansion area, I've been very curious to spend some time there and look at some of those use cases.
You mentioned fintechs and Fortune 500 companies. What do they want to do with stablecoins?
So Fortune 500s, I think one dimension of Fortune 500s is there's actually a lot of Fortune 500 companies that have embedded ecosystems that are within their infrastructure. So take a typical example. Somebody like a global retailer, a global retailer who maintains inventory, but then also has third-party sellers maybe that could come in. And there's many different manifestations of this. Many particular companies are like this. Not mentioning any one in particular, but they have a global set of suppliers that they want to be able to pay. They have a global set of merchants that are on their platform that are then delivering their services, and they might have a loyal customer base, a buyer base that is in. Every one of those is a candidate for a stablecoin based transaction. And that's I think very natural when it's an e-commerce setup. But there are even ones that are starting to think about like, hey, what does this look like in a in-person context? Can we use our wallet app that we have integrated? And there are many Fortune 5 companies that have a wallet app. Could they even hold a balance and start to hold a balance there and keep that money inside the ecosystem? And does stablecoin enable a particular set of use cases there? So those are the kinds of ideas that we're brainstorming with folks. And I think it's a journey. I think really what you're going to see is early adopters like Tether are the first ones that start in Genius compliant stablecoins. Makes sense. They're the industry leaders in the space. Then you're going to see financial companies like fintechs, remittances, and banks. And then really the third wave will be those tech and Fortune 500 companies coming in.
Do you think that middle wave and even that third wave is kind of underestimating like what's actually going to be unlocked here, or they're actually grasping what's in store?
It's a bit underestimated right now. I think once we're going to see how this plays out with the financial institutions. Once it plays out with financial institutions, it's going to be a lot more clear what is possible and what is going to happen. One way I like to joke about this is that Facebook wasn't wrong with Libra. Libra was a compelling idea, had a lot of legitimacy, and it just may have been a little too early, honestly. And so the same kinds of ideas that led to Facebook looking at that and saying, "Hey, maybe we should." I guess I should say now Meta, but Facebook at the time,
Right.
creating that stablecoin. I think they got it, and they understood the opportunity that was possible. And what's going to happen with regulatory clarity now coming through is more and more people are going to understand that exact thesis, that your financial infrastructure can actually be a profit center in a number of different dimensions, can increase engagement with your user base and your community at large. And I think once you start to see some design exemplars come through, there's going to be a lot of shall we say, second movers that are going to come in and say, "Hey, I want to do that. I want to replicate the success that I saw over there."
Yeah, I think that's such a good point too, though, because timing is so important in everything that we do, whether it's work related, life. But on the front of like bringing up Facebook and Libra, like the timing just wasn't there, and now we see other like move-based chains kind of excelling on that front. So for stablecoins, do you two feel like the timing is here, or we still need to kind of iron out some of these kinks to make sure we have that regulatory framework and guidelines in place so it can actually just go like hockey stick growth? I mean, we've already kind of got that hockey stick growth, but more hockey sticks on top of it.
I'm curious for Kevin's take on this one. I look at it's always philosophically hard to know, like, is this a perfect time? Because who knows?
Right.
In 12 months, it may be even better. But the set of macro tailwinds they're seeing right now, combined with the rise of AI and how applicable a new currency form factor can be inside the AI ecosystem, at least for me, makes it hard to imagine a better set of factors that could come in. You have regulatory certainty about being able to build in this ecosystem. You have general purpose growing wealth in many parts of both the U.S. and internationally. You have the rise of technology and interconnectedness kind of really reaching its final stages of global turn on to mobile and to internet accessibility. And then you have the whole AI movement. And so you got at least 4, maybe 5 macro tailwinds that are all contributing to this at one time. I don't know, Kevin, maybe hard to take the other side of this argument, but yeah, what do you think?
If you want to play devil's advocate, or is the timing right, Kevin? Yeah.
I honestly think we're just getting started, right? Like when I use my phone for a payment, right? Most of the time it's still not stable coins, right? But I think there's going to be a day soon where you go to buy a cup of coffee or at another retailer where whatever form you want to use, whether it's a credit card, debit card, whether it's like a peer-to-peer app, whether it's a bank app, I think you're going to be using a stable coin and the end user isn't even going to know it. So to me, I think there's still tremendous amount of growth on the table. So yeah, we're just kicking it off now. And I'm excited to see where it's going to go over the next like 5 years.
Is there any specific conversation you guys are having behind closed doors that maybe the public market isn't fully privy to at the moment? Maybe Kevin, from your perspective on the Hill, and then Nathan from your side with the institutions and like businesses that you're speaking to.
To be honest, on the Hill right now, it's all about clarity, right? So that's the primary focus.
Yeah.
There are some questions about Fed and master accounts that are like really in the weeds that are like pretty fascinating. So you get some questions about that. But yeah, most things circle back to clarity really quickly. So that's the hot topic for sure.
Explain Fed master accounts for the audience if they do not know what that is.
Yeah. So if you're a bank, you can typically apply for a Fed Master account, and then you have access to various Fed payment rails. So there are a few different things there. There's Fed Wire, there's Fed Now, there's Fed ACH. All those are different, like basically rails that banks can send money to each other. And there are different advantages and disadvantages. Some of them are quicker, some of them there's finality too. And the new banks coming online, these crypto banks like us, we've been around for 5 years, but there are a couple other OCC chartered banks like us, and then some fintechs also want to have access to those rails. So there's a debate going on right now. There's been an executive order. There's been
Right.
a proposed rulemaking by the Federal Reserve on this matter, and we're a lot of times explaining, well, what is a national bank exactly that does trust activities, and how does that differ from like a fintech, and how is that similar to a regular bank that everyone thinks about, and then walking through some of these things like, well, you don't need FDIC insurance because you're not lending, right? But some of these traditional banks need that because they are lending. So there are just kind of facts on the ground that are different in all these instances that we're really walking through right now with a number of offices and various people in the administration and other stakeholders. And I think it's an important step, like having more access to these accounts for the various types of entities, especially these national trust banks like us.
Do you ultimately see it kind of meshing together then into just like banks? Like we're no longer differentiating between like crypto banks, fintechs, and the other categories that you mentioned as well.
I think we'll sooner have like these national trust banks considered on the same playing field as a regular bank. Um, and then the fintechs, I think, are going to gradually get access probably to a Fed Master account, but that might be later down the road, and more limited. So that's what I think is likely to happen, hopefully in the next like year or two.
That's close, yeah. Nathan, what are you seeing from your side of things on this front?
Yeah, I think probably the biggest delta I'd say right now between like what am I talking about a lot versus what is in the broader crypto ecosystem zeitgeist
Hmm.
is the discussions around tokenized deposits. The tokenized deposit idea is accelerating very rapidly, and this is on every bank's mind. It's not just that they're trying to do it as a way to have an alternative to stablecoins, but even just that, even for themselves, wanting to be able to take their deposit base, put that on chain, and be able to have that circulate in with the same way that a traditional digital asset is able to instantly, global, et cetera, et cetera. These things that we know and love. So that's probably the biggest theme right now that I'm seeing that is um, not necessarily, I'd say, like well understood by the market.
On the tokenized deposit front, this is something that institutions are interested in then too, right? It comes from like both sides of the coin.
Yeah, yeah, it's absolutely right.
And so where do you kind of see them coming into the market on that front, or have they already started kind of coming in? Because I'm sure with the tokenized money market funds, tokenized equities, et cetera, like we talk about tokenization a lot on this show, but when it comes to tokenized deposits, how do you think about that a bit differently?
Yeah, so I think better or worse, banks like to make sure that they have a market before they go and build the tech and compliance program in order to bring a product to market. It's actually relatively difficult for banks to put things through, just because of how deliberate they need to be with everything. The benefit of tokenized deposits is they all know that they have at least one client of tokenized deposit, which is themselves. They can imagine themselves using the tokenized deposit for internal accounting, internal transparency, even settling with their international counterparties and being able to do that instantly. So I think that uh, confidence that at least if I do tokenized deposits, I know I can do it, and I know I can improve the cost basis of the operations of my bank are at least the first level of being compelling there. And so the nice thing there is that you can, in effect, fund the project through internal improvements, and then think about commercial use cases out to the client base that naturally follow from that. And so I think that's part of what is driving the desire to think about tokenized deposits is the banks themselves looking at this and saying, "Hey, how can this help me run my operations better?"
Hmm. I mean, banks are really racing to build their own like stablecoin or tokenized deposit products to that point. So what does that kind of mean for one, the industry at large, and then Anchorage, which has helped kind of pioneer these things?
So we're helping out on both fronts. We have a number of incredible stablecoins that we get to work with, like Tether. We get to have similar technology for tokenization being used to help banks tokenize their deposits. And so, the smart contract management, the ability to mint and burn tokenized deposits, and utilize us as a platform to do that is very natural for us. And so for us, it's another, I guess you'd say, commercial opportunity where we're building up the issuance and the infrastructure to then enable the innovation in that area.
Yeah. You brought up Tether a few times, so I've got to ask you, how do you think about Tether's dominance in the market? Obviously, it's the number one stablecoin by market cap and market share and all these other metrics and categories. But compared to maybe the other stablecoins that are out there today, what do you think is the competition and then the continued competitive advantage that Tether has over these other ones?
Yeah, so I've come up in Silicon Valley, and one of the most important axioms is to never ever underestimate network effects. So you have endless stories of people trying to supplant somebody else's network effect and failing miserably. So
Yeah.
when I look at something like Tether, I look at them as extremely well positioned on a global scale. And likely what ends up continuing to happen there is they will continue to grow as the stablecoin ecosystem grows. And so back to my earlier point that I think stablecoins are going to be fundamentally generative and positive sum, and the ecosystem is going to grow. And so on anything like a relative basis, I think Tether stays where it is as the number one player in that space. That a lot of that growth is going to come from USDT. A lot of that's going to come from USAT, their Genius compliant product here for the US. That is for institutional use cases here within the US, regulated use cases here within the US. So I wouldn't. I think it'd be unwise to underestimate them. I think they're positioned extremely well.
Yeah, I see your USAT
Oh yes,
emblem behind you.
that's right. Yes,
I was at that event as well. Yes, I love it.
yeah.
Kevin, how are you thinking about it from your side on the policy front and like maybe USAT for that matter, positioning itself within the US market?
It's definitely an exciting time, right? USAT just launched, I don't know, maybe 4 or 5 months ago. It's growing quickly. I think there's a real opportunity in the United States to advance, right? Obviously, they dominate globally. I think they're going to be very competitive in the United States. Um, I'm also very like proud of what we've done at Anchorage, right? I think a lot of times in the past, people have thought of us as merely a custodian, and now we're truly an infrastructure provider. It's quite awesome. Now we do settlement. Now we're doing trading. Now we're doing stablecoin issuance. Now we're doing tokenized deposits, right? We're doing stuff with agentic banking, right? There's just so many things happening. And it's great that we get to work with companies like Tether. We get to work with companies like Western Union, right? One trend that I'm seeing in the marketplace is honestly, crypto and traditional finance are coming closer and closer every day. And I think that's very, very positive long term for the industry.
Yeah, Kevin, I think that's a really good point too. And I want to ask Nathan, as the CEO of this of Anchorage, how do you kind of think about like the vision and overall like growth for Anchorage, given that like to Kevin's point, yeah, there was a time where it was just seen as like a custodian, right? And now you guys have so many different products, so many different offerings that the business has really become known across a number of different areas. So one, I guess like what was that kind of evolution like on the back end? Did it pan out the way you wanted it to? And then two, like, where do we go from here? Like, what do you ultimately want it to be seen as?
Yeah. I mean, it's a wonderful question, and it feels good to kind of step back and see that we have kind of stuck the landing on this reimagining of what we can be in the ecosystem. The plan was always to gain trust by doing the hard thing. And the hardest thing in crypto was to run a custodian and be regulated at the federal level. I mean, we were doing that, back in 2021. And so we certainly took the slow and steady path to build up that legitimacy. But now what we're seeing is that people are willing to trust us with so much more. Every large asset manager in the country, is onboarding with us because of that trust that we've built up. Many of the world's largest financial institutions are starting to trade crypto with us, are starting to use us as their collateral manager for their crypto. We have the trust of a huge number of the most important and compelling protocol teams as they launch new protocols and decide to partner with us there. And so we've been, I think, really maximizing the fact that we've built that trust to expand and to do more useful stuff with our clients. I like to tell our team that in a large sense, we have a product vision on where we want to go long term, but in a real sense, we're also quite naive when it comes to that, which is to say we just do what our clients ask us to do. Once they trust us with their infrastructure and say, hey, I would like you to do this, I would like you to do this, it becomes a very natural evolution for us to go through. Now, messaging obviously trails reality there, and so it's nice to be at the point now where people are understanding that we do more. But I think it'll continue. We want to be here to enable all the institutions worldwide to be able to participate in this movement. We think the crypto movement is incredibly important, incredibly inspiring in what it's trying to do for the world at large. And we want to make sure that all of the world's institutions can come in and be a part of this movement.
What does it take to kind of get that trust and then hold on to it? Because it's definitely a hard thing to have within this space. And it's very hard to gain it and also very easy to lose it. And I know trust is like paramount for the business. Yeah.
I mean, I think in many ways the trust equation is in a large sense about continued resilience over time, and so it doesn't come as slowly as wine. But it doesn't necessarily come faster than wine either, though. Nobody wants to drink something that was
made last week,
or even last year. You want to know something that has been burned in and has been ready. Care and attention has been paid to it, and then longevity. You want to know that, hey, I'm working with a institution that has been around for a long time and is going to continue to be so. And so it's really kind of all of these dimensions. Do all of our clients love us? Yes. Do we have all the regulatory licenses that we need, and do we continue to act in a way that is befitting of a national bank regulated financial institution? Are we able to walk that tightrope of being crypto native at the same time as being frankly boring? Like, can you be boring and crypto native at the same time? We think so. We think we can enable net new interactions on Hyperliquid from within qualified custody, while also being the back-end sub-custodian for a large, globally systemic infrastructure bank. So we spend a lot of time thinking about it, making sure that we do a good job there, and it's always nice to hear it kind of reflected back that we're doing a good job in that area.
Yeah, and maybe taking a step back from just Anchorage, but the industry at large, do you think the trust has really been regained on the front of both institutions and then also on the Hill? Like, given the following or the previous market cycle where we did have, collapse, even after, 1010 and the fall of 2025, right? Do you think like the trust is being held across the industry, or there's still kind of hesitancy?
I think we've got a kind of consistent story of the longer you're around, the more that you avoid some of these issues. And so it doesn't take much to kind of remember all the issues. Actually, sometimes it does, because there's been so many that people sometimes forget about other things that have happened. So you've got various things that happened for a number of years ago, some of the insolvencies. You've got say 1010, like you've mentioned,
Right.
DeFi hacks. These have come and passed. And so people that have been able to be resilient across all of those, um, it's no easy feat. And so I think people recognize that staying uh, kind of true to your identity through that is what leads to some trust. I think it also leads to an understanding that as large financial institutions come into space, say banks, broker dealers, fintechs start to come in, they want to work with people that have weathered through all of that. It's easy to solve for the known unknowns. It's hard to solve for the unknown unknowns, and hard to kind of a priori think about what are the issues that I might face. How do I make sure I design my systems to be resilient against that? I think that's why you see a lot of large financial institutions choosing to partner with us, because there's a sense in which we can not just be, in a sense, a technical provider or an infrastructure provider, but really almost an advisor and a watchful eye as people come into the space. So I think trust has been restored, and I think we're gonna really build on it through this next phase as we see full institutionalization of digital assets, and that additional kind of trust layers are going to come in where institutions come in, then asset managers can come in, and then the whole stack can get built on top of the new infrastructure we're building.
And I would say in DC, it's almost a complete 180, right? Um, Yes, there are members that don't believe in Bitcoin, but there definitely are members now, and I would say a super majority of members that support blockchain, that support like tokenization of real world assets. They get it. Like they want America to win. They want all the jobs to be here, all the innovation to be here, right? So they are at the very least like cautiously optimistic about blockchain and all this legislation that's being thought about and contemplated across the gamut of tax issues to illicit finance to market structure, right? All these different things that are out there, and that's a drastic change from how it was maybe 3.5 years ago, 4 years ago. So it's welcomed. Anytime we have a vote in Congress now, we get somewhere between like 20 and 40% of the Democrats to support the legislation and nearly all the Republicans. That's pretty awesome. So I think everyone's waking up and realizing that this is the future.
It's amazing. I also want to talk to you guys before we wrap about AI. I know Nathan mentioned agentic commerce, and this is something he loves to talk about, and I feel like it's getting weaved into the conversation as well. But maybe on that front, what have you seen on agentic commerce year to date in a meaningful way, like the growth trajectory for it that has really resulted in both you and the firm at Anchorage kind of doubling down on this sector?
Yeah, I mean, I think that what we're seeing is the early stages of an industry. So, if I could take you back in time to late 2017, early 2018, it was a similar vibe. 2017 is the first time Bitcoin entered public consciousness. I think there's probably that year in 2017 was the first time people talked about Bitcoin at the Thanksgiving dinner table. This year, people are going to be talking about their agents and what they have their agents doing for them. So, does that mean it's a huge today opportunity where you're seeing a ton of volume? No. You're seeing the beginnings of an industry where things are just starting to get figured out. We're figuring out like what is the best harness? What do I actually want my AI agent to do? Do I just want it to inform me, or do I also want it to act? All of that has to be figured out and shaped and molded. I know personally, I'm spending a tremendous amount of my own personal time kind of training my agents, loading context in, getting a sense so that they have all the information. So I have a chance that they'll act as me and like me out there in the world. We're probably a little far away from saying agent going and buying a house for you, or these kinds of use cases that I'd love to eventually see things like that be possible. But yeah, I'd say it's promising early stage, and what we want to do is we want to be in the mix. We don't want to be late. If you'll believe it, 2017, I thought we were late to crypto. I thought most of the crypto stuff had already been figured out. The players that were going to win had already won. Turned out to absolutely not be the case. It was still like the early innings there, and that's what's happening with agentic banking. The models are just getting better and better every day, which I think only leads to us wanting to trust them with more and more things. And so, of course, we're going to get to the point where we trust them with financial infrastructure.
Yeah.
Our Teslas now drive us around without us intervening, and our agents are going to be able to do the same thing in banking. It's just inevitable.
Yeah, I mean, like when you brought up the whole idea of agents buying us houses, like I laughed a little bit, but like it won't be a joke one day, you know? And it's like the same way about cars driving themselves. Like Tesla cars can drive themselves completely. You do not need to intervene. So all the points that you're making, like this is a reality that like comes with time, right? But do you guys think the agentic banking kind of sector will really grow and like proliferate this year, or it's something that'll take a number of years to kind of come to fruition?
The way we're thinking about it generally is that within the next calendar year, so say 12 months from today, by then it's going to be clear there's going to be a set of use cases that matter. There's going to be a set of use cases that are dominating. And then say 24 months out, that's when you're actually going to have a proliferation of different use cases. But it's going to probably have eras, the same way that the crypto industry has had eras where, you had, I don't know, pick your thing,
DeFi summer, the NFTs, meme coins.
Yes.
I mean, that's not as all sophisticated as what we're talking about, but yes.
Yeah. And so I imagine it'll come in waves, and you'll see a similar agentic banking set of waves that are going to come through, where additional use cases and scenarios get unlocked.
What would you say are the lowest hanging fruit or like the most easy to accomplish, like real world examples on the front of agentic banking?
Right now, I think it's me and you being able to set up basic transactions. So
send Nathan money. Yeah.
Send money, or even give it a credit card. Honestly, I don't even know how much of the initial use cases are going to be crypto related. This is why, agentic banking, the reason it's called agentic banking, we're not calling it agentic stablecoin banking. We're not calling it agentic crypto banking. We're calling it agentic banking because it may well be a non-crypto narrative for some of the initial use cases. And so I think the agents getting cards is probably where it starts. And then agent to agent being over stablecoins is probably a phase 2 of what's happening.
Would both of you give an agent a credit card today? A pulse check.
With a spending limit, for sure.
Yeah, I do the same.
Yeah. What's the limit? 100, 500, 1,000? I don't know. What's a reasonable amount to trust an agent with?
I suppose it depends on. It's a relative question on how much.
Of course. I'd say like 500.
Yeah, I think like
oof.
Yeah,
I wouldn't be happy
hundred
if they lost 500, but like I could move on.
Yeah,
maybe.
a couple hundred feels reasonable.
Yeah.
Just to have it automated some of the aspects of your life. I also think that related to that, it's not necessarily mine or Kevin's field, but I am very curious what happens once these things start to dematerialize. Like once we are interacting with agents in a way where we don't even need phones anymore, because maybe it's conversational, or maybe the agents are literally robots in our house. I don't know which way this is going to go, but some of those I think are only going to increase the level to which we have a trust relationship there.
I think also once people experience it and they know that it's safe and secure, then they'll trust it more and a lot faster. So, yeah, time will tell. All right, aside from everything that we've talked about, what is something that you two are watching right now that you think our listeners should also pay attention to?
I think in the DC world, I think tax policy, right? I think there are a lot of things like the the use of crypto as a payment, making sure the taxes around that are very important. Things like staking, how that's taxed, or mining. So I think that's something that's going to get a little bit more attention in the coming months. I don't know that we're going to get a bill across the finish line this year, but I think in the coming years there's going to be some refinement on the tax policies at the federal government related to crypto.
Honestly, interestingly enough, my answer is our families. Like when you start to think about like your family and friends, everything's happening with AI somehow makes me appreciate them even more. And so if there's one thing I think like the listeners should be paying attention to is like their family and friends. And
so thoughtful.
spend a lot of time there. So yeah.
I love that. I love that. Well, maybe that weaves into my last question I always like to finish with is if you guys could leave us with a piece of advice, maybe something that you carry with you throughout your time in the space or personal.
Oh, it's interesting because Kevin and I actually talk about this a lot. I don't know. I feel like we should give them something together here, Kevin.
The group think advice. What's something? Put your heads together.
You like to garden, and I know you have chickens, Nathan, right? I have chickens as well. Maybe,
I like to garden as well. I got some peppers in the back. Yeah.
Yeah. Kevin and I both raise chickens. We both have that. It's great. I think I mean, I don't want to speak for you, Kevin, but I think we both appreciate the earthiness of it, grounding, and also I think it's very good to give your kids chores. And so like being able to make sure my kids have quote unquote farm chores is a good thing. So yeah, buy chickens.
Buy chickens.
Yeah.
Long chickens.
Long chickens.
Kevin, you concur?
I agree. Yeah, it's good for the kids.
I love it. Amazing. Well, Nathan, Kevin, thank you so much for coming on today.
Thank you, Jacquelyn.
Thanks.